Now, we have a very important announcement today and a very important guest. Some of you know that for a long time, State Farm was a sponsor of Money Matters, and we had written a grant earlier in the year, and I'm just very pleased to announce that we have a guest here today, Bill Russell. He's a wonderful friend of OnTrack and to the community. He's a member of Asheville City Council, and he's been a State Farm agent since 1994. He has a BBA from Marshall University, and his awards include the Chairman's Circle and the Legion of Honor Qualifier. He's also the father of 3 wonderful children, and Bill, welcome to the show.
It's great to be here again, Celeste.
Thank you so much for coming, and you have a presentation to make.
Just a little one, yeah. Well, last year was my distinct pleasure to award, or on behalf of State Farm, deliver the check to help fund the program for 6 months. And this year, once again, and even better, State Farm was able to do a full grant of $12,500. And so today I have a check for you and Consumer Credit Counseling Services for your work that you've done, and $12,500 on behalf of State Farm, all of our affiliates and agents throughout the country, and especially those here in Buncombe County. And we appreciate what you do, and absolute shivers on my arms just to be able to give you that check. That's fantastic.
Well, thank you for presenting this to us. And listeners, I know that you're just going wild driving down the road, because this will ensure that OnTrack can continue to offer Money Matters, this important radio broadcast every Saturday that brings information about finances to the people in Western North Carolina, not just Buncombe County. So, Bill and State Farm, thank you so very much.
Well, you are welcome. I've been a part of this since I think the Don Stark years before you came on. So since 1999, I've been a guest on and off several times. So I'd love to be a part of it and continue to.
Well, thank you, and it's just such an affirmation of State Farm's care for the community that you all are willing to make this important investment, because y'all know, I mean, the finances are tough and grants are few and far between, and so we were looking really hard at some of the places we might have to cut, and so this investment in this service is going to ensure that the Money Matters show continues for another year.
That's
so
great.
Thank you so much, and thank you for all that you do for the community, and part of what you do is being a wonderful State Farm agent. And so, listeners, we're going to spend some time now visiting with Bill, as Money Matters always helps people with information about finances and life. Insurance is a big piece of life.
Absolutely.
So we want to talk a little bit about that. So I thought that we would start by hitting homeowner or property insurance, home insurance, because home ownership month was June, and we continued it into July, and we got the home ownership fair coming along. So thinking about insurance for someone's home, what are some of the factors that determine the type of home insurance that somebody might need?
Well, primarily, I mean, you have to determine your ownership in the property. I mean, if you own your home, then in the state of North Carolina, you need a homeowner's policy, and there's a couple different forms, but they're designed to protect the home, the structure, your personal belongings, your liability if someone's injured on your property, medical expenses if people get hurt, and then there's other forms of homeowners insurance if you own a condominium, for example, or if you're a renter. Those policies are more primarily focused on your personal belongings. I kind of say you could take a homeowner's policy and remove the structural coverage, in which you're left with a renter's or a condominium type policy.
Okay, and so since the condominium, the people essentially own the inside of the sheetrock.
Yeah, it's pretty much everything. Some condo policies are different than others. Certainly talk to your association if you own a condo. Some require the tenants to have their own policy, some don't. So, but it's important to make sure that you are properly covered.
I know back in my mortgage lending days, which feels like forever ago, that was one of the things that when someone got a mortgage, there was the requirement that you have home ownership,
Absolutely.
home insurance. If your house was paid for, do you have to have insurance?
No, I mean, that's part of getting a loan, is you have to have it. But when you pay your loan off, you can choose to drop your homeowner's insurance if you want to. But
if you're that crazy, right?
Yeah, I mean, a $200,000 policy may cost $40 a month. So to risk losing everything that you've worked so hard and spent maybe 30 years to pay off, yeah, it's I don't know anyone who self-insures their home. It's a very low risk. I mean, 1 out of 100 people have a substantial loss in their life, but there's just the potential is just too large to not have the policy.
Absolutely, and I think when you think about insurance, that's exactly what it is, the peace of mind that you're buying,
Absolutely.
Right? And so when you're thinking about home ownership or home policies on your home, what are some of the features that people should be particularly careful about?
Well, the most important part, for example, homeowners, is your structural coverage. If the place burns down to the ground, you want to make sure that you're protected from a catastrophic loss and be able to be put back where you were prior to the loss. So if you have a $200,000 home and you only have it insured for $100,000, you could potentially be, underwater in the end and not be able to get back to where you were before the loss. So that's really important.
So is that the replacement value, and there's like the inflation or appreciation clauses?
Yeah, in North Carolina, if you have a replacement cost policy in your home, if your house is burned down, you get paid what it costs to rebuild it, replace it with a new, modern, there are actual cash value policies out there that some people have on contents and other things. It's not as complicated as it may sound. Again, it's just really important, I believe, to have a good agent to kind of go over your policy with you so you understand what is covered and what is not covered. Deductibles also important that you know and you're familiar with. There are several options and endorsements you can get on your policy. North Carolina has a standardized homeowners policy, and there are some things that are limited. For example, jewelry is only covered up to $1,500 for theft, so people who might have a $5,000 engagement ring, you need to talk to your agent about how to get things properly protected, and go over those other options and endorsements to see if you do or do not need those.
Now, if you had a policy that covered a ring, like a rider or something like that to cover a ring, would it only be for theft, or if it was lost, or how does that work?
They're called personal articles policies or floaters. There's different names for them, but they're actually, again, depending on the company and the policy, it's an all-risk policy, so it's truly any type of accidental loss. So
if it goes down your sink and it's gone.
I mean, we
wow.
had someone who lost a ring at a concert series at the Biltmore Estate, just lost it. It mysteriously disappeared. Well, that's not covered under homeowners insurance. Homeowners only covers it for theft and other, like fire and that type of thing. But if you just lose it, if it just disappears, that's not covered. So people need to get a separate policy for their jewelry and any fine arts or other items that are very important to them.
Well, interesting. And so we were talking, and I got us off track because I was, this is kind of fascinating. And so other things that people should be particularly careful about, we talked about making sure you have it covered for enough to rebuild.
Yeah, and if you're a renter or a condo owner, your personal belongings, you talked earlier about, in just some personal conversations about the State Farm's online calculators and how good they are to help people figure out how much it would cost if they came home one day and their apartment building was in ashes. I mean, to go rebuild, replace your 10-year-old couch, we're going to buy you a brand new couch, all your clothes, your 6 or 7, golf shirts and whatever you have. You get brand new.
Dishes and appliances.
Everything,
and
anything you can pick up and take out of your condo or your apartment. So that's a pretty important conversation to have, and I tell people, especially with condos and renters, to round up because it is so cheap. In Asheville, in the city, to get a $25,000 or $30,000 renter's policy for your personal belongings, it's $4 or $5 a month. They're very inexpensive, and a lot of people are just shocked when they find out how affordable it is.
And you think, well, gosh, I don't want to spend that money, but goodness, spend it, and then if something were to happen, a fire or flood damage or any of that stuff,
a lot of landlords and apartment owners now are actually requiring their tenants to carry it because oftentimes if you find a tenant, for example, who, let's say the place burns down, they may want to go after the owners of the property, for example, for maybe poor maintenance and try to create a liability claim. And a lot of time that pressure is taken off of a renter entirely if they know, they've got a State Farm adjuster sitting there writing them a check. We have coverage to put them in temporary housing until they have a place to live.
Oh, wow. So
there's all kinds of, again, that's not just our policy, this is a standardized policy.
Sure.
But, there's lots of protections afforded in this policy, and it's just a great thing to have.
That is really cool. You were speaking of the website, and I was on it the other day, and I thought, man, there's some really good resources and tools. One of the things that I found was a home inventory. That was pretty fascinating. Can you tell our listeners what that is and why they might want to access it?
Yeah, you can go to statefarm.com, and it's a pretty interesting website. We were kind of behind the times for a while with technology, but State Farm's done a great leap. But if you go into the homeowners and categories, you can actually go in and kind of click and answer a lot of questions about the type of home you have, and it kind of helps you assess what kind of contents, what it would cost to replace your contents. And it's a great website. There's all kinds of interesting tools, and homeowners, life insurance, renters policies, everything that we do. I think we have 80 policies now from different disability. It goes on and on. So,
I noticed there were links upon links.
It's overwhelming.
Get lost in it. Well, I know when I've talked to people about home insurance on homes and contents and things like that, Somebody told me one time that it's really a good idea to maybe go through the room and video or take photographs or some way to capture what it was that you had in your home before it was destroyed.
Absolutely, and that's good for two reasons. One, it really helps an adjuster if you're, but primarily it helps you. I mean, if I went back to my house and everything was gone, I couldn't remember half the things that I probably still have in boxes. I found some skis. I used to ski 10 years ago. And it's probably $1,000 worth of downhill skiing equipment. So going through your house and now, take your phone or your video camera and go through closets and open drawers, and if, God forbid, you ever needed to sit down and make a list of all the belongings, this would be a very easy way for you to do it.
Versus trying to take a pad and writing everything
And that
down,
is exactly what we do if people don't have an inventory, is they sit down with a blank sheet of paper with our adjuster and they start going room by room trying to remember everything.
in their mind. Oh
Yeah.
my goodness, after the devastation of loss.
And receipts and things like that, and people don't have those for everything they bought over their lifetime. So a video inventory is a great tool, and I strongly encourage all the listeners out there to do that if they have the time.
That's really wonderful. Well, do you have some ideas that can help our listeners save money on insurance for their house?
Well, yeah, for homeowners, it's really important. A lot of times when people buy a home, they think, for example, they buy a $250,000 home, they need a $250,000 homeowner's policy. Well, that could be a house that would only cost $100,000 to rebuild. So most companies have a replacement cost calculator that can make sure that your coverage is appropriate for your structure. Again, if it's a 2,000 square foot house on 0.2 acres in downtown Nashville compared to 2,000 square foot house on 20 acres on a mountainside, the price of the home will be much different, but the value to rebuild the structure will be the same. So, and you might be underinsured. That's another good reason to call your agent and do that. You certainly don't want to underinsure the structure. That's the purpose of insurance, is to protect yourself from catastrophic loss. So you don't want to skimp there. Other things that people can do is actually look at your deductible. I mean, if you and I knew that the biggest risk we ever faced for a loss was, say, some shingles blew off your roof during a windstorm and it was $1,400 to replace it, and you wouldn't carry insurance, you would just cover that. So we're looking for catastrophic type protection. So deductibles are a good way. You can bump your deductible up to $1,000 or even $1,500 or even $2,500, and just kind of make a pact with yourself that you're going to self-insure smaller claims, and that definitely will help you on your premium.
That's wonderful. Those are some great money-saving tips for homeowners insurance. We're visiting with Bill Russell. He is with State Farm here in Asheville, and State Farm has just given us an underwriting check for money